All right, thanks everybody for coming out. This is TK Kugler, general partner at Wasabi Ventures. Today we have the team over at Datanomix, a really great story for us because it's an investment that we were in the very earliest days of Datanomix, part of that first dollars in sort of part. And we've got to watch them grow up, and now we get to be a part of their next round. And so with all of that preamble out of the way, I'm going to hand it over to the Datanomix team, and they're gonna start telling their story.
Awesome, thank you, TK. So Greg McHale, founder and CTO of Datanomix, and my partner
John Joseph, CEO of Datanomix.
So we'll let me pop up the screen share here. We're gonna just put up some slides to give a little background to help tell our story. So to start off with, give folks some background on who John and I are and why we're doing what we're doing at Datanomix. So John and I both come from the enterprise IT infrastructure space. We met at a company called EqualLogic about 16, 17 years ago. I was on the storage engineering side. John was VP marketing, VP product management, building out our channel strategy and our early messaging with that product, which was a data storage appliance. We ultimately sold that company to Dell in 2007 for $1.4 billion. So long story short, fast forward, EqualLogic, Dell, additional startups in the IT infrastructure space, and enterprise IT infrastructure became incredibly commoditized. John and I had known each other a long time, and we said, you know, there's these new data types that are coming out here in the world where there are folks that are in an industry that is not as sophisticated or accustomed to technology as what we're used to in enterprise IT. Let's go start to look at some of these. And one of the ones that we went and looked at was industrial manufacturing, particularly companies starting to look at using machine-generated data, the whole trend around Industry 4.0. What can our machines tell us about production, our processes, et cetera? And what we saw in our early research in speaking with customers, looking at competition, et cetera, was there's a tremendous opportunity for someone to come in who understands enterprise simplicity, understands data, understands analytics, and build a really turnkey system that connects to machines, figures out what's the story that the machines are trying to tell about production, how's the day going, what are the opportunities for us to generate more profit as a business based on what's happening on that production floor, and bring that all the way to the end user in a super simple way. And it was from that process and that alchemy that Datanomix was born. So to set some context on exactly and specifically what we do, we provide a cloud-based analytics platform for industrial manufacturers. We're focused on discrete processes. The initial market that we're going into is actually the CNC machine tool space, and there's a few reasons for that. One is that machine tools that are less than 15 years old are all born speaking a language. That language is called MT Connect. And what that means is it's very easy and straightforward to connect up to a machine tool and start to receive a data feed from that machine tool about what's happening out there. Moreover, there's 25,000 plus machine shops in the United States alone, that are in the $10 million plus per year revenue category. So good sized shops care about solving these kinds of problems, collecting data, and millions of controllers and tools out there that we can connect to. So what we uniquely do for this particular market is we're not just about collecting the data, presenting it, saying, here you go, you figure it out. We've actually built in some machine learning and some complex analytics that figure out how to take all the information from the machine tools, a complex set of signals, and we turned it into something very simple that we call Fusion Factor. And what Fusion Factor is a live score of production effectiveness for how things are going on the floor. We look at, we figure out what's the job or the part that the machine tool is running. What are the typical cycle times, typical utilizations, number of downtime events that occur, part production, rate per hour, how many parts per hour do they produce? We distill that all into a very simple score, and we've actually even made it into a letter grade, that if you're getting an A, you're meeting or exceeding expected production. If you're getting a B or a C, something's wrong. You've got to look into this. The best part of all of this is there's no human input required. We literally get the connection to the machine tool, and we figure all this out automatically. The only thing we ask the customer to do is type in what the name of their company is and what their work schedule looks like, so that we can automate some reporting for them, and that's it. So why is it that people in this industry specifically care about this problem? Well, as it turns out, there's tremendous demand for industrial manufacturing in this country. And one of the big things that you hear when you talk to shop owners is, I have the machines, I have trouble finding the people, and I'm turning work away, not because I don't want the money, not because I don't want to do the work. It's because I can't get to the efficiency level that lets me experience and realize the kind of revenue and growth that I can. So I have this fundamental efficiency problem: labor, skill gap, machines not able to maximize the capability of the machines that I have. And when you dig deeper into what's actually happening inside these factories, what you find is one of the reasons that they can't optimize that problem is because they're not using technology in the right way. We like to say manufacturing floors are using paper maps. When they learn about what's happening on the manufacturing floor, by the time they get information, they're aware of yesterday's problems. There's nothing that they can do in real time to say, geez, I should send my best person over to that machine center. If we fix that, we're going to do $10,000 better today. They don't have that level of insight into what's happening on the production floor. So what we're focused on is making sure that when we connect up to that production floor, we give production a voice. Production can tell you exactly what is happening and why it's happening. There's a story that's unfolding every single day on the manufacturing floor about what's happening on those machines, and we are bringing that story to the surface in a very simple way. So what does that look like? We use an analogy to take people through this. What we say is all production floors have hotspots. Your hotspots are either going to be machines that aren't running well because they're having problems, or production that's maybe running, but it's completely off track. The performance of what's happening on that shop floor is not aligned with your expectations. So for starters, very simple perspective. What are your machines doing? What are they running? What state are they in? Are they having problems? And how are they scored? You can see in this slide, A+, B-, C-. This is us communicating to folks, here's the kinds of machines, jobs, et cetera, that you want to be paying attention to. Let's say that you want to go drilling into a particular machine and see what story it's telling you. Well, here's a machine that's telling you, I started off the day off track. I'm off track because my utilization's off track. I'm having difficulty holding my cycle times. My rate of part production doesn't look great. I'm experiencing alarms, errors, et cetera, that are coming from the machine. All this data that we're talking about, again, organically comes from the machine using that MT Connect protocol. We're taking this raw data and we're turning it into this experience that we're showing you. And then moreover, because of how we're characterizing production in the intelligent way that we do, we're able to distill the world down into simple letter grades, simple stock tickers. How's it going? I'm ahead, I'm behind, my cycle times are off. What do I need to pay attention to? And most importantly, this is all seen in real time. This particular dashboard that we're showing on this slide is something folks hang up on a monitor that's out on the production floor. It's updating as every single part is made. It's very easy to see, wow, we need to go spend time on job 16042. Something is amiss over there. Let's see what we can do. And when you put all this in a blender, what happens is when a manufacturing floor is equipped with real-time data and real-time insight that is directed and guiding them as to where the problems lie and why those problems occur, it is easy for these companies to find 20% plus in productivity by just responding to the top 3 to 5 things that come across their desk or their monitor in the course of a day. That's how tight these shops run in terms of whether they're on the edge of having a good day or a bad day, and when things go off track, how much it impacts them. To just give a little bit of context on how we're going to market as a company. So we currently have half a dozen customer deployments. Two of them are revenue generating. In fact, we just had a meeting yesterday where one of our customers is expanding from the initial dozen machines that we started on to now a plan to roll out to all 97 of their machines. So we're targeting shops that are generally in the 25 plus machines, $10 million plus a year in revenue. We've been doing that, as TK said. Earliest money raised a little over a year ago. We've been doing localized reference selling, knocking on doors, sending emails, meeting folks at trade shows, etc. We're going to continue to do that while we focus on acquiring our first 20 customers. And then with the round that we're raising, what we're really doing is bringing this money in to run some very targeted go-to-market experiments. So inside sales representatives, inbound leads, pushing out at trade shows, generating lots of content, et cetera, identifying the shop owners, the production managers, et cetera, that are out there, getting them into the process, working with them, with an inside sales team, and ultimately getting them to a virtual demo, a proof of concept, and ultimately, trying to push them to purchase. From a pricing perspective, our solution's priced at about $1,000 per machine per year. If you look at some competitive solutions, we're kind of right in the sweet spot for what some of the newer technology in this space does. If you look at us from a functionality perspective, no one else has figured out how to distill these complex signals into such simple visualizations and such simple feedback about how production has gone in the way that we do. And that's really our main differentiation and competitive advantage versus who else is out there. As I alluded to before, the current raise is a $1.5 million round. We do have a lead. Several of our existing investors coming in actually for larger check sizes than the previous round, and a couple other new small funds folks as well. That are coming into the mix. So, from an output perspective, we're looking to turn this $1.5 million round into about 50 customers, about $1 million in annual revenue, and using that as the platform to demonstrate that, we've cracked the code on the efficient go-to-market, the efficient customer acquisition. We feel like we've already cracked the code on having a product that, that attacks this data acquisition, data analytics problem in a very simple way. So now it's time to marry up the go-to-market side of that to the equation and prove that we can scale that to the first 50 customers on a pretty modest raise. And with that, I'll turn it back to you, TK, or turn it over to questions.
No, perfect. And thanks for that. I'll kick off the questions, and for those on the line, you can do one of two things. You can use the chat function, or we'll unmute folks, and you can ask questions at that time. But let me kick off the questions for you guys. And so, if you had to describe what the one biggest pushback you've gotten, you've got 6 installs now. What's the one biggest pushback that you've gotten from that first kernel of customers? What's the one thing that is the biggest barrier to more adoption that you've heard so far?
You mean when we speak to a prospect and we do not get a proof of concept, for instance?
Yeah. What's the biggest pushback?
Yeah. So the biggest one is you encounter shop owners who believe that they have a full handle on everything that happens inside of the factory, and they don't believe that they need to apply technology. I know how that machine sounds. I know how that one smells. I'm intimately aware of exactly how my production works. And if you think about that from the demographic of the prospects, that person's truly a non-believer and a very late adopter, if ever. Those folks are out there. We're running into them, I would say, on the order of 10% of the time in terms of the shops that we speak to. In the other cases, where we do get the POCs, we do get I'm interested in a demo, I want to see this. You're finding that these folks know that the lack of use of technology on the shop floor is just mind-numbingly wrong in the year 2019, and they need to change. And when you show them how simple it can be, that it doesn't have to be as complicated as people tried to show you, even 5-10 years ago, that, we even tell people, start out using the product for 20 minutes and do 3 things that it tells you. And if that doesn't make it better, throw us out.
I would add to that by saying in our profile that you saw on the second page of the deck, we profile customers with 20 machines or less as likely not good candidates for prospects as customers for us. And the other piece is for the 20 machines or more customers, their owners, their leadership team is aware that without the use of data analytics and real-time tools like ours, their top line growth and profit is never going to grow beyond where it is today. They can't keep throwing more capital equipment at solving the problem. It's running out of steam.
Oh, I think you're muted, TK.
You lost your sound.
I am muted. You could see my mouth moving, but you couldn't hear anything. So, which I have to tell you, many people would hope for that. My other question that I had for you is if you had a crystal ball and you looked out 3 years from today, and knowing the 3 years when you're at an early stage startup means like forever.
Yeah.
In many ways. 3 years from now, kind of describe to me, not so much what the company looks like, because that could be anything, but really what kind of customers are you serving 3 years from now, considering where you're starting now? And I know why you picked this, and you talked very eloquently about why you picked this market segment, but 3 years from now, what kind of customers are you serving?
Yeah, so I think, as I mentioned, we've got 25,000 targets in the market that we're in, and there's plenty of hay to be made focusing on this machine tool market kind of at the outset. So speaking specifically to that category, what we see is us working our way into some of the larger shops so we're starting in the mid-market. That's our background, that's our sweet spot. We know how to sell into that space. But you start getting into the Smith & Wessons, the Pratt & Whitneys, the Barnes Aerospaces of the world. We've had early conversations with them, and their main interests are around some of the predictive analytics initiatives that we have, specifically around part quality. So one is I think you see us getting into some of the big primaries, in the aerospace world by continuing to extend the platform's capabilities to the kinds of problems that those folks have around quality. Number two is there's this MT Connect standard is a beautiful thing when you're trying to replicate solving the same problem over and over and over again. Having a data standard in a factory is wonderful. What's even better is that we're actually on the review and advisory board for the MT Connect standard, and there's an initiative right now to build a bridge between MT Connect and OPC UA. And so OPC UA is the major protocol that's used in industrial manufacturing environments, more so in Europe than in the United States. But that bridge will allow us to, through literally no effort, by already supporting MT Connect, be able to talk to additional classes of machines that are already pushing out data in OPC UA format. And the way I like to explain this to people is there's fundamental laws of manufacturing productivity. It's how long is the machine up? How many parts are you making, per hour? What's your part production rate? Are your cycle times on or off track? And are you having problems? Any manufacturing system can be evaluated using those metrics. And if you look at how we've built Fusion Factor, those are all the key components of our model. So when we start connecting to other types of machines over the OPC UA protocol, it's going to be the same story. We'll be able to understand the utilization of the machine, derive the cycle times, the rates of part production, the times in which they're having issues, and this Fusion Factor is going to extend to additional types of factory environments. So this could be plastic injection molding. This could be extrusion. This could be auto assembly componentry. There's so many additional discrete production environments that take advantage of OPC UA. So that bridge is literally going to 10x the market opportunity for where we can go. And we think that Fusion Factor is a really unique way to bring analytics to those folks.
Yeah, I think I would just add to that by saying that we are selling to a market that understands its production effectiveness measured in hours or days. We're actually delivering to them a tool that tells them what their production effectiveness is in seconds or fractions of a second. That's a market difference in the way people will manufacture going forward, and it's a behavioral modification to everyone from supervisors all the way down to operators. Having this tool give them the kinds of insights and information in real time that they don't expect from their tools today or get from their tools today.
Very cool. I got a question actually emailed to me today from someone who told me that they couldn't be on the line, but they read about the company and had this question, which is, talk to me a little bit about what the next round of fundraising looks like to you. How far does this round get, and what does the next round look like to you?
Yeah, so this round for us with our plans of how we're looking to go acquire those first 50 customers, $1 million in revenue is sort of your classic 20 to 24 months of runway, and that includes ramping up sales and marketing efforts, pretty significantly from where we sit today. Thereafter, I think what we would be looking to do is sort of go raise your more classic Series A in the $7 to $10 million range, and at that point, we will have gotten significant customer footprint in the machine tool space. We should start to have some early customer footprint from adjacent industrial verticals, via the OPC UA efforts that I talked about. And what we're probably looking at that point is, continuing to do what we're doing in the United States, but also, opening up Europe, trying to make a presence in Germany, et cetera, as we crack deeper into that OPC UA, additional industrial verticals. And I think that, on that kind of a raise, we feel like, the company will be able to get to a very significant place. We're not looking to raise $100 to $200 million, with this company. We believe that we can get to significant customer growth, significant customer traction on fairly modest raises. And the only reason that we would ever think about beyond that, going for, some kind of a major 8-figure raise, would be because it's crystal clear that, we shovel coal into the furnace, we open Europe, and we're going to go generate 250 accounts really quickly doing that. So, we would be very focused on additional money beyond that, having to have direct customer acquisition impact that was really valuable to us. Actually,
European and Asian markets are orders of magnitude larger than the North American market.
Is a follow-up to that question is, and it's a logical follow-up, is what does an exit look like, here for you? Who are the type of people that acquire companies like you today?
Yeah, so there's tons. So there's sort of your classic big industrial manufacturers. There's the Siemens of the world, the Bosches of the world. All of those companies have very global, very visible initiatives around production analytics, Industry 4.0, robotics, etc. And those companies are generally not producing, cutting edge organic solutions. And many of them are actually trying to build out. They all want to be the platform of the industrial manufacturing environment. So you're seeing a lot of products come out of companies like that are actually rivaling like PTC, right? So PTC is trying to be that company as well. And so they're trying to become that kind of that operating system, that platform of the industrial manufacturing environment. Then you look at companies that are in the vein of PTC. Well, there's a whole bunch of these industrial analytics. I call them kind of more, consulting oriented companies. So you've got PTC, you've got Accenture, you got folks in those categories who they're going out and they're scouting projects, large engagements, trying to work with OEMs, machine tool builders, other industrial manufacturers around facilitating data collection, data analytics. Well, what's happening with those companies is as they work those projects and they get into a use case that's very compelling, then they go out and they say, hey, who's out there that has, best in class analytics for this particular type of manufacturing? Let's go see if we can work with a company like that. And you're seeing those, those companies get picked up, by those folks who build those early partnerships as they get into those use cases together. So there's a lot of options there. There's also, machine tool builders themselves who have figured out, they have to get, or industrial equipment builders themselves who have figured out we've got to get into the software game, or we're not going to be competitive. A decade from now, no one's going to care if we have failed to help them on this journey around data analytics. So there's a lot of swirling activity in this universe right now.
I'd add to that many of these companies, examples, C3 IoT, IBM, General Electric, are all high-end players that play with large international strategics. A product like ours would enable them to go down market if they decided to do that in a very frictionless way and without cannibalizing their high-end business. So some great exit opportunities with those types of companies as well.
Cool. I got a question actually texted to me from one of our participants that was on the line and then had to drop off, but asked me the question, and I haven't actually seen anything in your materials about this too, but given their area of specialty, have you looked at, or is there an opportunity anywhere in the pharmaceutical space? Because there's a lot of machining in the sort of testing and both the testing and the manufacturing of in the pharmaceutical world. So I didn't know if that's an area that you've even looked at.
We have looked at it for sure, and as you'd imagine, there's a lot of properties in common with what we're talking about in the industrial manufacturing cases. What we have found is there are some companies in the pharmaceutical space that basically do absolutely nothing in the realm of data collection, understanding how the laboratory machines are running, what they're doing, where's the data associated with the experiments they've run, etc. The one of the challenges in that space that has it have a little more friction now than say what we're doing with industrial manufacturing is there is no one data standard yet. There's one under development. So there's an equivalent to MT Connect in the pharmaceutical life sciences world that's called Allotrope. And we have our eyes on Allotrope as something that we'll be paying attention to, down the line for sure. Is again, the laws of manufacturing, as I said, are universally applicable. It just, with our first raise and this next raise, it's, not necessarily going to be an area that we're going to focus on, but I can tell you that we're generally aware of data standards in other places and how we think we could mate to them over time.
Gotcha. I got a question from Pierre. He sent it to me. Talk to me a little bit about, or talk to Pierre really, about what the lifetime value in your models of a customer is. What does that look like? And if you're going to answer that question, you might as well also answer what the CAC looks like in your model as well.
Absolutely. Yeah. Thank you, Pierre. So, at $1,000 a machine a year, we're targeting 20 plus machine shops, as we said. So, our expectation is, lifetime values of customers are minimum, mid 5 figures, and, obviously getting into significant 6 figures over time. From a cost perspective, before I talk about customer acquisition, I'll talk about kind of what our margins look like at those price points. So our cloud costs for running our service, data collection, data analytics, et cetera, are pretty optimized. So when we connect up to a machine at $1,000 per machine per year, and say we're doing 20 as kind of the minimum, our margins are in the north of 90% kind of space. So there's a lot of room for us there. In terms of customer acquisition, for the phase that we're at, we've been doing what John and I like to call founder selling, which is wearing out the bottom of your shoes and getting wins. But from what we've seen, there's a few aspects to it. So one dimension is, what does it actually cost us to run a pilot? And we can run a pilot with a customer with a $35 Raspberry Pi. In terms of what do we think it ultimately costs us to acquire them, from a resources, budgetary perspective, we're looking at right now 60 to kind of 90-day sales cycles is what it feels like. In terms of lead acquisition, it's sort of your classic. I'm producing content. I'm doing trade shows. I've got a marketing staff of probably 1.5. I've got a sales staff of 3. So, however that amortizes out across the first 50 customers is what we're looking at. With our current stage of the company, I unfortunately don't have this is the exact number of what customer acquisition cost looks like, but those are the variables that kind of how they're playing out and how we're going to watch them.
Yeah, I mean, just commentary. I think that this raise gets you to the point where you can dictate what and that LTV is.
Absolutely.
That's why this round is priced the way it's priced is really the story.
You got it. Yep.
Pierre had a quick follow-up question, I know you talked briefly about the competition sort of isn't real time for the most part, and that but talk a little bit more about who the competition is. Who do you run into? All of those things.
Sure. So there's really two classes of competitors. So there's the kind of what we call the legacy manufacturing execution systems, or some of the early production analytics systems. I'll give you a name. Simco is one, CIMCO. The account that I mentioned yesterday, where we're going to be expanding out to 97 machines, we're displacing Simco in that particular account. So you have,
they've been in that account for years.
yeah, they've been in there probably 5-6 years. So in that class of competition, what you have is systems that candidly look a lot like Excel 97. They are very difficult for end users to arrive at answers quickly. It's hours of clicking to answer basic questions, but it's better than being blind. and that's sort of how the expectation has been set, in the market. The data is inaccurate. The configuration is a disaster. It's very painful. And there's half a dozen companies that look a lot like Simco, and they've penetrated thousands of accounts in this space. So we think that's a beautiful thing. The second class of competitors is some of the newer, more recently funded companies. And the, sort of the easy and the obvious one to throw out there is a company called Machine Metrics, who closed a Series A, I think 90 to 120 days ago. And so Machine Metrics is sort of a next generation manufacturing execution system like the Simcos of the world. Their shtick is really much more about operator performance, counting parts, measuring quality, collecting data from operators on the shop floor. And, for folks that are looking for, a level up from Simco, I think that makes sense. What we have found when we've run into people that evaluate platforms like Machine Metrics versus evaluating us is they believe a few things. One is compliance, on operator input to know how everything is going. Their expectation is compliance is going to be like 60 to 70% on the best day. And so not having good data as entered by humans is a real hindrance to knowing what's actually going on. The second thing is the cost to get those solutions deployed is significant. You're talking about tablets at every single machine, in some cases hardwired into the ladder logic or the bowels of the machines, and to get the data that's being collected. So when you have that proposition juxtaposed with just show us, we show up, we just want the connection to the machine. We don't want anyone to enter anything. We don't want anyone to say anything. All this stuff's just going to show up in the product. We'll connect at 10 a.m. and you'll be having insights by lunchtime. That's how we're positioning ourselves against those two categories. Excel 97's first generation, Machine Metrics is cumbersome, complicated, longer time to value, not as much insight. We're turnkey, simple. You'll know things in the first 2 hours you use the product. That's simple.
That's very cool. Got it. Yeah. Pierre actually mentioned to me, send me a note too. He's got a lead for you, a company called
Awesome.
All Right Industries in Illinois. So I'll make sure I get the contact and we get an introduction for you. So
thank you, Pierre.
Yeah. So you got that going for you as well.
We love it.
Interesting. Just anecdotally, I was over the 4th of July. I was at somebody's cookout, and I was talking about you guys, and they have like 14 machines, and I was explaining to them, you're a little on the small side, and they're like, are you sure we're a little on the small side?
They don't want to be. They don't have to be.
They don't have to be. So so we might have leads coming from a couple different directions for you. On that note, it's a segue for I'll give anybody else if they got a last minute question to go ahead and send it in for me. But the last question I sort of had is a segue from that. Is one of the things that I see as a challenge for you to get sort of that scale going, and I think in the next phase you're going to have to work out is how fast can you turn a point, a POC into into an actual paying contract? How can you shorten that length? Talk a little bit about some of your thoughts there of how you squish down that time frame a little bit so that you can escalate the scale.
Yeah, so I think there's a few factors that mainly drive it now, and the customer that I was alluding to earlier, that one ended up being at 62 days from first installation of pilot to okay, we're ready to go. So one of the things that we see is, because our software is so sort of sophisticated in appearance, that we don't look like what other software looks like in the industrial manufacturing space. See earlier comment about Excel 97. And so there's one of the variables that we can tune is getting those initial super users as part of the pilot more quickly acclimated into the product. So that's things like integrated product tours. It's things like video tutorials showing someone who's in their role, the supervisor, the production manager, etc. Here's how I run my morning production meeting. Here's how I troubleshoot issues during the day. Getting them more quickly into the shoes of the people that are like them to compress that learning curve is one major variable that's there for us. Sorry, go ahead, John. Let's say the other major variable around time compression is sort of qualifying or pre-qualifying the readiness of the factory for connectivity. So we've been approached by some folks that are in the IT outsourcing industry, for instance, that want to help get factories connected up that aren't connected up as a way of facilitating solutions like ours. So there's some opportunity for us as we get leads in and qualify them to help hand those off to integration partners to take care of that piece of the work, while we're continuing to fill the funnel on the other side of that with, say, factories that are already connected, or biasing towards factories that are already connected, so that our sales cycle per se, once we get that POC going, isn't constrained by, okay, well, these 5 machines are already connected, but when somebody coming back to do the next 10, the next 15, et cetera. So there's opportunities for us to kind of stage out the pipeline, if you will, and not have that running against us in part of the sales cycle.
Yeah, I would also say that, having done this many times before, educating the customer before they enter the sales funnel, before they enter the sales cycle timekeeping process, on the fact that you have profiled that customer for the right fit. Are they the advocate? Are they ready for transformational technology on their production floor? Is their production floor capable of delivering this kind of data to our product? And sowing those seeds so that when the sales team ultimately engages with that customer, they're educated on our technology, but more importantly, they're educated on what they need to do at their company to prepare for this, and they've identified the right either peers or subordinates that are going to help make this execute flawlessly. And that's some pretty clever marketing that we will be able to do to enable that process. What Greg and I have found through founder selling is, if you touch the wrong person at a company, it's like a third rail versus touching the right person at the company, who could be a production supervisor. It's an operations vice president. It's the owner of the company who's trying to do top line growth of 5x over the next 5 to 7 years, and doesn't want to keep buying Akuma machine tools to get there. They know that they've got 20 to 30 points of productivity in their factory today that they can't utilize because they have fire jumpers that drop from the ceiling to put out fires on the floor, rather than being able to surgically strike and predictively and preventively make corrections on the production floor to keep production going in the right direction. So marketing through education versus just promotion, in my opinion, is one of the fastest ways to accelerate scale and adoption. And one more thing, using customers who have successfully transformed their factories into Datanomix-oriented insight tools is the best way to role model this for people who are looking to be that kind of person. We all role model somebody in our lives. We talk about athletes and musicians and professors and political figures, not so much, but everyone has a role model. And so role modeling people through our marketing is probably one of the most effective ways to get to the hearts and minds of our future prospects.
Makes a lot of sense. Any last questions? I think we are coming up on the time anyway, but guys, I think that was superb. I think it really told a good story, and I think your answering of the questions was really good stuff. So what happens next? We'll publish this plus our due diligence material probably within the next week on our platform, and we'll hustle to close by the end of the month with the rest of your investors. So that'll be the goal.
Thanks,
Cool.
TK.
We appreciate it.
All right, guys. Hey, enjoy your evening, and thanks for your time tonight.
Take care.
Thank you. Thank everyone for the questions.